Good morning, and welcome to episode 144 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, October 18th, 2023. President Vladimir Putin is meeting in China with his counterpart, while President Biden and President Netanyahu are meeting in Israel. Both sides are discussing the world's conflicts, both in Europe and Ukraine and in Israel and the Gaza Strip, and our world continues to polarize. Turning to the economy, oil has been rallying lately. The producer price index came out hotter than expected. The CPI came out slightly higher than expected, and retail sales were more than double what was expected. All of this feeds the fire. It adds fuel to the fire for those hawks that are calling for higher interest rates, because all of these things, oil being higher, PPI, the producer costs going into the end goods, the consumer prices still climbing, and retail sales not abating, all this feeds into this higher inflation, sticky inflation, higher for longer type mantra. The problem is the Fed chairman and Team Powell are pretty much at the end of their rope. There's not much further they can go. Basically, we're looking at financing $33.5 trillion in debt at this point, and they just can't go much higher with interest rates because nobody's going to buy that debt. In the meantime, households are struggling. We're seeing the normal middle class are putting their necessities, their daily expenses, their food and things of this nature on credit cards with high interest rates. These are things they used to tap in and refinance their home for. They can't do that anymore because they don't want to give up a 2-3% interest rate and refinance at 8+% in order to get some spending money. Their wages aren't keeping up, but they have to find it somewhere, so they're going to credit cards. And folks, this just flat out does not end well. You can imagine this is having a positive impact, both the geopolitical and the domestic economic events are having on precious metals. Prices are moving up and considerably. Take a look at the figures. Gold is up 3.8% over the past week. It's trading at $1,945.90 an ounce from $1,874.90 last week. Silver's up 5.3% to $23.30 an ounce. It was $22.13 last week. Platinum is up 2.9% to $914 versus $888 an ounce last week. And palladium is the only metal that's down 2.2% over the past week. It's at 1,156. It was at 1,182. With silver outperforming gold over the past week, the amount of ounces of silver it takes to buy 1 ounce of gold has decreased to 83.82 versus 85.1 last week. And the US dollar is holding steady. It was 105.80 last week. This morning we find it at 106.31, so it's holding tight. The bottom line, metals are rising. You would expect that with geopolitical crisis. Historically, these movements in the price upward tend to be short-lived. Don't recommend that anybody go chasing this, but just continue on with your plan of regular buying of precious metals. Over time, you will be just fine. We continue to measure these precious metals with basically mismanaged fiat currency, so that price over time is going to go higher. Just don't do anything knee-jerk. Just continue on your normal path to accumulate metals for that rainy day. For those that are looking to see us here, the balance of the year, we've got 2 more opportunities. The first one will be at the New Orleans Investment Conference from November 1st through November 5th, and from November I believe it's the 11th through the 15th. We're going to be in South Beach in Miami for Joel Nagel's 27th annual President's Week. Both, I believe, are still accepting registrations for attendees, and we'd love to have you join us. Fantastic lineups at both of those conferences, and we hope to see you there. In the meantime, go ahead and subscribe to us on YouTube, like us, send us your comments and questions, subscribe to our social media, subscribe to our monthly newsletter and our twice weekly alerts. But in the end, don't ever forget that getting rich starts with keeping what's yours.